Welcome to Earnings Central. Bank of Maharashtra rang in the banking results for the quarter with an outstanding set. Advances have grown nearly 20%. Net interest margins appear to have bottomed. They've risen slightly to 3.86%. And NPAs have fallen as they have been for the last several quarters. What's best? The bank's return on equity is probably the best in the sector at 23.8%. Joining me now is Mr. Nidhu Saxena, Managing Director and CEO of Bank of Maharashtra. Mr. Saxena, good morning. Happy Makar Sankranti to you and to all our viewers. You know, if you produce results like this, it becomes very difficult for a journalist to ask tough questions. But I'm going to begin with one issue that seems to stare. You know, your advances are growing far faster than your deposits. So loan deposit ratio has risen to 85. Is this a problem? I mean, how do you propose to tackle it?
Good morning and happy Makar Sankranti to you, to Latha and all the viewers. Yes, LDR in my case has gone up to 85, rightly noted, but this is the global CD ratio. What has happened during this FY, we have started our IBU operations. In September 2025, we had 100 million. In December 2025, we have reached to 400 million, which is around 3,500 crores. So if you exclude this, the domestic CD ratio is 83%.
Okay.
And what we have done is, Latha, lot of bulk deposits, high-cost bulk deposits were allowed to leave the system, and we have relied on other alternate sources of raising resources. So we went, today my refinance outstanding is almost 17,900 crores. So if I exclude this, my CD ratio is standing at 78%. And I still have room to grow, because what we intend to do is to maintain our CD levels around 82, 83,
Okay.
where we think we have effective deployment of our resources and the maximization of the interest earning opportunity.
Okay. No, fair enough. There are banks with even 100 LDR, so you won't count as an outlier at all. But how do you see yourself tackling this? What kind of a guidance can you give us for advances? Will they continue at 20%? And therefore, what will deposits be?
If you recall the guidance for FY 25-26 that we shared in the beginning of the year, advances would be growing at 17%,
Yes.
what we said. But what is actually we are experiencing, like this gift IBU, over and above this, we are opening under a project we are calling Project 321. We are opening 321 branches in the period of 18 months. While I speak today, we have already made 116 branches functional in this FY. Now, let's appreciate that these branches, whatever business they are doing, base for them is zero. So whatever incrementally they are giving us, it is over and above the last year number is zero for them. So that's how I think, and this new branch expansion drive is going to continue for some time, and this will actually sustain the high double-digit growth both in the asset side and the liability side.
Okay. So you mean your deposits, deposits you had guided at 14%, you will do far better, you're saying?
Yes. So if you see this December quarter, deposits have grown YOY 15%, within which the low-cost CASA has grown YOY 16%.
Yeah.
So if you see September 2025, our total deposits grew by 12%, within which the CASA grew by 15%.
Okay.
So focus is clearly on the low-cost component. The high-cost bulk deposit, it is just a matter of function of interest rates. Today, I can easily decide to tweak my interest rates, and a lot of deposit will flow to the system. But we will grow our deposit book very mindfully, looking at how it is going to impact the bottom line.
Fair point.
We have other sources, refinance, infra bond raising. We will keep exploring these options to see that profitability, the business that is growing is a profitable one.
Okay, it's good to hear that you all are so mindful of all these other ways of raising money. Mr. Saxena, which brings me directly to margins, since you're speaking about cost of funds. You all have actually improved from the previous quarter, you know, from 3.85 to 3.86. This is despite one more rate cut coming. So can we say that 3.85 was your bottom, and now you're only going to see margins improve. Any guidance?
So when the rate cut cycle started in Feb 2025, we were mindful and looking at the numbers and calculations. Our calculation and the portfolio, which is linked to repo, was giving us a sense that around 18 to 19 bips contraction will happen in the NIM.
Yeah.
And by the third quarter, we were expecting, and most of our deposits had repriced with that. So we were feeling that there should not be any further contraction in NIM. And if all goes well, we should see probably some improvement. So 2 bips improvement has come in NIM, but I would like to maintain guidance number of 3.75,
Okay.
which we shared in the beginning of the year. Because there could be a rate cut uh, further, and that will impact me along with other players in the system. But let's not forget that 3.75 also is a decent number, and I think we will like to maintain that number and achieve it also.
My sense is you are, playing very conservative and overachieving. I hope you won't give me the same answer for the ROA. Your return on assets, you had guided 1.75. You're already at 1.86. So can you guide us when we hit 2? This is a very good performance.
So, Latha, this is a journey which quarter on quarter we are trying to look at these ratios. What are the factors that contribute the numerator, the denominator? I only can say that we are mindful of these ratios. We should give the comfort to the markets that if they have reposed faith in the bank equity, they are getting the right positioning at right levels. So the point is, I will continue to maintain my guidance. Maybe conservative, yes, 1.75. But yes, I think the way we are growing, sooner or later, we may like to give a fresh set of numbers of guidance where ROA can be enhanced from what 1.75 that I have maintained for this year and even the last year.
Okay. Well, I guess it's important that you're playing very conservative. Let me come to your gold loans. Actually, all retail loans, 36%. I wanted to ask you if you can maintain this kind of a pace. But before I come to that, specifically gold loan risen by, it's almost doubled. What is the kind of LTV you are maintaining? Because a lot of analysts worry that if gold prices fall a bit, are you all still safe?
So, if you ask me, around 18, 20 months back, the gold portfolio we were having was around 7,500 to 8,000 crores. Today, along with co-lending, we have reached 22,000 crores. Minus co-lending, my gold loan that has happened through branches is around 17, 18,000 crores, and which is translating to that for between 45 to 50% year-on-year growth, quarter on quarter. So this gold loan LTV, we are going as per the Reserve Bank of India guidelines, and we are also very mindful, conservative. We have in fact designed our products where my LTV is low. We are giving a price concession to the consumers, so they can pledge a gold, and if the loan requirement is lower, we will price that product at competitive lower price. So that's how we are also mindful that if what if the gold prices should come down, how it will impact my portfolio. We have a robust mechanism when we have increased this portfolio, robust mechanism to see that even at the account level, if there is any breach from the LTV on an ongoing basis. So we follow that very meticulously. And I think we are the kind of benefit gold loan as a product is giving. It comes with a zero risk weight. There is still a huge scope for banks to grow, is what I sense. And we are keeping this as a focus product. The only two things that we make sure before we allow even a branch to start doing gold loans is the purity check of the gold loan and safekeeping of the pledged ornaments. Once those two things are done, we go ahead and permit the branches to do gold loans.
I'm sorry I'm interrupting you, sir, because I'm trying to pack in probably half an hour of questions in the 10, 12 minutes given to me. But this one I have to ask you, because you're the first bank announcing numbers. Was there any impact of the labor codes?
So, while we are mindful, the code has come, some rules are under framing, but whatever has come, we have looked at those. impact in our case because my contractual staff strength is minimal. So we are not seeing any significant number to even share here. It's a very minuscule number that is
Okay.
coming as an impact of labor code. And I think we will keep, if more rules are coming, we are watching those.
Okay.
But to give you an answer, no major impact, no significant impact at all on Bank of Maharashtra
Okay.
on account of the new labor. And the reason is that my contractual versus the permanent payroll
It's very
staff,
small.
it is minimal.
Okay. No, I get your point. Actually, the IT companies kind of put us on watch. Otherwise, we were not even preparing for this. Suddenly, the investor community is becoming aware that this can impact. It's good to hear that the first bank that's reporting numbers is saying that it's going to be a minuscule impact, as of now at least. A very quick last question, sir. You know, recoveries. Last year, you did 1375 crores. This year, you have already done 1044. Where do you end the year, you think? 1500?
So this is, I think, the number you have shared is recovery from the written off book.
Yes.
So what we are having a stock of almost 21,000 crores. And the last 2 years, we have, in a very focused manner, looked at recovering from the TWO book. And we have kept, because around out of 20,000 crores, around 8,500 crores are in NCLT at various stages. So at times you may not be very sure when the resolution will come and in which quarter. It may go to the next quarter while we expect this
Fair enough.
quarter. So we have kept a number of 1,200 crores to 1,500 crores
Okay.
annually to be recovering from TWO book for the next 4 to 5 years.
Got it.
And that number, once we have done, we have kept two special schemes where we are giving a NDND kind of a feature, non-discriminatory, non-discretionary, and we are able to resolve a lot of loan assets in the TWO up to 50 crores under these two schemes.
Okay.
And we have seen that strategy is working well. Last year we did 1375, but I have kept a number of 1,200 to 1,500 crores annually as recovery number from TWO book for the next 4 to 5 years.
Okay.
So today we have almost reached 1,200 crores, and I think the last year was a success year. This year also we will be ending the year between 1,200 to 1,500.
Okay, so I've overshot my time, but I still have questions. Let me take a rain check for another day to ask those remaining questions. Thank you very much, Mr. Saxena, for spending time with us, and congratulations on ringing in the banking results with an outstanding set of numbers. Have to wrap up on Bazaar on that note. Chartbusters up next.